Hey guys, it's Serge Berger here. Today, let's have a look at the US dollar and what the rise in the US dollar has done to particularly the S&P 500 in terms of slowing down its upside momentum. The dollar, of course, has been on a real tear since last summer and again the first quarter of this year, and we'll see more about what that's going to mean to S&P 500 companies when the earnings season kicks off more meaningfully this coming week. But the S&P has already given us a lot of signals, so I want to give you guys a little bit of insight into that and why I think the S&P, while I do think there's some more upside, it's likely capped. At least the momentum is likely capped. And again, the main reason for that is because of the S&P 500 companies have a lot of international sales, so when they convert those sales back into US dollars, they get less dollars for those sales. So very basically, within the S&P 500, within the U.S. domestic stock markets, the Russell 2000 has already given us a lot of relative strength versus the S&P since last October, and you can see that very clearly here. And I do think this trend will continue as long as the U.S. dollar shows moderate strength, at least on a relative basis versus the basket of currencies. You can pretty much look at the US dollar index. Next, let's have a look at the S&P versus, say, China. Okay, and I'm gonna do this in the same ratio. So we'll take the FXI, which is the ETF, China large cap, and we divide up by the S&P, and you can see a lot of relative strength by Chinese stock markets here. We can do the same thing with the EWH. EWH is Hong Kong, and you can see if we take the EWH versus the SPY, you'll again see that relative strength. So it's not just in the US that the Russell 2000 is stronger than the S&P, it's also foreign markets. Again, it's a lot of this to do with the stronger dollar. You can even take EEM, this is the emerging markets ETF versus the S&P 500, and you'll see we've seen relative strength actually just as of late, just over the past month, let's say 3 weeks or so. And again, this is important to understand for perspective because it likely means as long as the US dollar continues to rise, the S&P will probably give us relatively less upside momentum than probably stock markets, certainly around Europe, as you've seen already, also in Asia, and I would argue very strongly also versus the Russell 2000, because the Russell 2000 companies have a lot less of this international exposure and actually benefit from a strong dollar because of the deflationary forces that it brings about in this environment, and basically gives U.S. consumers more purchasing power. So I do hope this makes sense, guys. If you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. I'm also on Periscope as of this week, and otherwise go over to thesteadytrader.com and see what we're doing over there. Take care, and I'll see you in the next video.